Hi, and welcome to this edition of the Options Learning Center. My name is Rick Orford, and I've been a stock and options trader since 1999. And today, I am excited to show you how to buy long put condors and use bar chart to get the most out of the strategy. A long put condor is a directionally neutral options trading strategy that uses four put options with the same underlying asset and expiration date at consecutively higher strike prices. It works well when you expect an underlying asset to trade with low volatility until expiration. That way, you'll achieve maximum profit. To set up the trade, you'll buy an out-of-the-money put at one strike price. Then, you'll sell a put at a higher strike, sell another at an even higher strike, and finally, buy an in-the-money put at the highest strike price. The result is a bull put and a bear put spread that creates a long put condor, resulting in a net debit. The goal of a long put condor is for the asset to stay between the two middle strike prices at expiration. If that happens, maximum profit will be achieved. The maximum profit on a long put condor is the difference between the strike prices of either of the spreads minus the net debit paid. The maximum loss is limited to the net debit paid at the start of the trade and happens if the asset price at expiration either trades above the highest strike price or below the lowest strike price. BarChart's options trading platform has every tool that you need to help you succeed in your trades. And let me show you how it can help you trade long put condors by searching the entire market first, and then later I'll show you how to look for trades on specific assets. Okay, so the first thing you need to do is go to barchart.com if you aren't already there. At the top of the page, click on Options, then look for Long Put Condor. Once you click on that, you'll be brought to the results page. This page shows you some potential long put condor trades and the respective underlying assets, plus some information like strike prices, premiums, maximum profit, maximum loss, and probability of profit. Remember, all these headings can be clicked to arrange them from highest to lowest or vice versa. These results are already an excellent start to get you started on your trade. But if you want more customization, click on the Set Filter tab here at the top. This will bring you to the Options Screener tool. As you can see, several default filters are already in place, and it's a perfect place to start the trade. But if you'd like, you can add or remove filters according to your preference. To do that, click on the Add a Filter field, type in your desired filter, and click Add. Or if you're not sure what to add, you can click on the drop-down and select from dozens of filters. Regardless of your trading experience, you can find everything you need right here. You can also remove filters that you don't want or need. Okay, so now we're back to the default. And I'm going to make a couple of quick changes right here and tick weekly expiration under days to expiration and ETF under security type to expand the results. Next, I'll scroll down to arguably the most important filter, which is probability of profit. This shows you the chance of the long put condor expiring profitably, even by just 1 penny. Now, keep in mind that the higher the probability of profit, the lower the actual profit potential, and the higher the potential loss. So it's a good idea to balance risk with profitability. So I'll set this to 60% or higher, and then click on See Results. Okay, so here we go. Now, I'm going to click on the Max Profit header to arrange it from highest to lowest. Now, this trade is a bit more risky than I'm willing to pursue, even though it has 60% probability of profit, because SPY's price is trading at $571.30, and the upper short put strike is at $572. So it doesn't leave me a lot of breathing room. So instead, I'm going to click on probability of profit and arrange the trade ideas from highest to lowest. And here we go. This one looks like a good example. Now, before I discuss the trade, let me show you how to save your screener to reuse it later and optionally have bar chart email you at a specified time with trades that match the filters. To do that, just click Save Screener here near the top right, then type in the name of the screener, this could be anything you like, and click on when you want the email to arrive. Okay, so with that out of the way, let's go ahead and discuss the trade details. According to the screener, you can set up a long put condor on the SPY with the ETF currently trading at $571.30 at the time of recording. Here's how the trade works. For the bull put, you can buy the $505 strike put, paying a premium of $1.66 per share, and then sell the $520 strike put for $2.35 a share. For the bear put, you'd sell the $580 strike put, collecting $14.29 a share, and then buy the $595 strike put for $24.74 a share. This setup results in a total debit of $9.76 per share, or $976 total. Your maximum profit on the trade is $5.24 a share, or $524 per contract. All options expire on November 14th, and that's 47 days remaining till expiration from the time of recording. The trade also has a 64.4% probability of profit. Now let's break down all the potential scenarios for this trade. Okay, so let's start by getting the break-even points on the upside and the downside for easier trade calculations. To get the break-even price to the downside, add the net premium paid to the lower long put strike. For the break-even to the upside, subtract the net premium paid from the higher long put strike. So that makes $514.76 on the downside and $585.24 on the upside. The trade ends with a maximum profit if the ETF stays between $520 and $580. To calculate the maximum profit, take the width of either of the spreads, since they have equal distance, and subtract the premium paid to set up the long put condor. The maximum profit on this trade works out to $5.24, or $524 per contract. If, however, the ETF moves beyond the long strikes, the trade enters the maximum loss condition. The maximum loss is the debit paid to set up the long put condor, which is $9.76 a share, or $976 per contract. Here's how the long put condor looks across different price points at expiration. As you can see, the profit zone is in the middle. While the trade starts losing money, the further the ETF's price moves away from the short strikes and reaches maximum loss when the ETF moves beyond the long strikes. That's why long put condors are perfect in low volatility conditions. So that's screening the entire market for potential long put condor trades. But what if you have a specific stock or asset in mind? Well, that's also pretty easy to do, and let me show you how. First, if you're not already there, go to barchart.com, then search for an asset using the search bar. In this example, I'll type in Apple. Once you're on the stock's profile page, navigate to the left and look for Condor strategies. Then, click on the Long Put Condor tab and you'll see the default search results. Here, you can click the drop-down to change the expiration dates, change the trade legs, rearrange each column, or click the screen button, then set filter to reach the option screener page for a more granular search. Any trade that involves writing or selling put options puts you at risk for assignment. For this example, you have 2 short positions in the trade, and if either of them is in the money by expiration, the option will be automatically assigned. If any of the short puts gets assigned, you'll buy 100 shares of the stock or ETF at the strike price for every contract that you wrote. You can also sell your long put position if it hasn't expired yet to capture any remaining extrinsic value and maybe mitigate some losses. but keep an eye out for trading fees as they might make selling shares more preferable. Like all spreads, traders using the long put Condor enjoy well-defined risks and profit and potentially lower costs than other neutral strategies. It also works well during low volatility market conditions. Also, long put condors usually offer better risk-reward profiles than short iron condors. However, like all spreads, the long put condor has a limited profit potential, which you can only get if the underlying asset trades within a limited range. The long put condor is also very sensitive to time or theta decay, so if the price of the underlying moves beyond the short strikes, well, you start to lose money. It's also more complex with its 4 trade legs, which is also the reason why it can have higher transaction costs than most strategies. The long put condor works well during neutral market conditions and can have a higher profit potential than short condor spreads. However, it still has some risks and may be too complex for beginner traders. That's why it's important to keep up to date on your trades and use option screeners. That way, you give yourself the best chance to stay profitable. Now, if you need more information, visit the Option Learning Center, where you can learn more about all of the other options trading strategies, how they work, and how to profit from each.